Tuesday, November 14th, 2017, Monaco 64, home of alternative economics and contrarian views. So I'm going to look at the markets this morning. It's just around 8 a.m. London. I want to look at volatility or the VIX index. And I want to talk a little bit about this book again, A Pocket Book of Gold, a survival manual for monetary mayhem. Yeah, before that, then let's have a look at what we're doing. Spot gold 1276.50 is down $1.50, but still pretty steady. 1275.50 to 1279.30, the range overnight. Silver holding above 17 here, 1703, down 2.5 cents. The range has been fairly narrow, 1698 to 1708. The Dow is down 1 point, so not much there, 23,441. S&P down 3 at 2581. The NASDAQ future down 5 at 6310. Currencies, the pound yesterday had a pounding, got a bit of a pounding, rebounded a little bit, and now it's dropping again this morning. It's down 22 pips at 130.95. I still think that 130.50 level is still key support. And especially if we drop below 130, that could be quite negative for the pound. Euro, fairly strong, up 22 at 116.89. So the euro is creeping back up here. The euro against the dollar. The dollar is a bit stronger against the yen, up 10 pips at 113.73. The Nikkei futures is up 50 points. So what about the bonds? I spoke about bonds yesterday. Well, yesterday the stock market actually traded up nominally. It was very weak on the open and before the open. The Dow, S&P, and NASDAQ were down like quite substantially. Well, like 0.5% in the Dow or something like that. Then we, came in and the market traded higher and we finished slightly higher. I was speaking about bonds, how the 10-year yield rose last week from around 231 to 239, even though stock markets had dropped. Well, today bonds are still, the 10-year yield, the 10-year note is pretty steady. The yield is at 240. I noticed it dropped a little bit yesterday and it's back up today, but nothing to write home about yet in the bond markets. What about the VIX? There's a lot of talk about the VIX. So what is the VIX? A lot of people talk about it that they might not know. Well, it's the CBOE volatility index. And what's volatility? Well, that's the, how sharply the market moves up or down. And usually, when the stock market goes down, volatility goes up and vice versa. But there are periods, I remember during the 08 financial crisis, because I traded a lot of options, mostly for bonds, but also we looked at options for the indices, stock market indices. We even had a period where the stock market rose and volatility rose. It was quite amazing. So things can get really crazy in unusual markets. So don't ever think that volatility in the stock market can only rise if the stock market drops. It depends. So what is it exactly? Well, it's a popular measure of a stock market's expectation of volatility implied by the S&P 500 index options, calculated and published by the Chicago Board of Options Exchange, the CBOE, and it is colloquially referred to as the fear index. So why am I talking about this VIX? Well, because yesterday, for example, the VIX was up almost 2%. It rose from around 11.29 to 11.21, which is still historically really, really low. But on October, let's see here, we made a low, let's see. The VIX made a low beginning of November, just above 9. So now it's at 1150, even though the stock market stayed pretty steady. So it's pointing maybe to increased volatility. Am I saying the stock market is going to crash? No, we could see volatility go up and the market stay pretty steady and even go up. What could happen is that we could have days where the stock market actually drops quite a bit and then goes back up. And it will be a change from what we've had in the last few months of, always, small little gains, always going up, making new highs. So this is something interesting to look at. There are ETFs that you can buy into to speculate on the VIX. One that I've looked into is the TVIX. Am I, advising people to do that? No, I'm just talking about it. I'm just talking about the markets and how things work. If you want to, have a look. Could be interesting. TVIX, that will basically get you long the volatility and it will be leveraged 2 times. So what else is going on? No, that's about it in terms of the markets and the VIX. Now I want to talk about this book. And I'm going to go almost to the end here and talk about the politics of gold. And this book was published in 2010. Some of you might say, oh, this will never happen, but we need patience. So it says here, the politics of gold, and I'll read. Gold is a unique instrument in that it measures confidence in governments. As such, it is highly political. When gold rises over the long run, political legitimacy and the ability of government to lead and manage is being called into question. Government, however, is not an actor in isolation. Government represents powerful interests. Government was supposed to represent citizenry, i.e. the people, and it doesn't anymore. And it goes on to say, the transformation of the Western world from industrial to financial capitalism has hugely expanded the genre and power of the financier in politics. So they talk here, Jim Sinclair and Peter Carlin, about financialization. And Jim Sinclair, if you don't know, his family were his father's family name is Seligman. And the Seligmans were financiers in the late 1800s, early 1900s. They helped finance the Union side during the Civil War. So they are part of the financial elite. They intermarried into all the famous New York banking houses like Goldman and Warburg and other ones. So this is a guy who's kind of from the crowd. I've read his book he recommended that I read. About the crowd in New York, all the big New York families. I'll talk about that book later anyway. But it says here, this has spawned an oversized, deregulated, and wholly unnecessary financial industry in which corporate shareholders were downgraded in importance and the individual financier was upgraded. So does that sound familiar? And it goes on to say, the disaster situation the West finds itself in is a result of the triumph of personal opportunism over responsibility. Government has been all too happy to assist in this. The financial services and banking industry have been revealed as places where clients are fleeced for the benefit of bankers and their bonuses. And it goes on to say, the client relationship has been changed into one where the client is first transformed into a counterparty and then a victim. Nobody seems to care how much they rip off someone else. The ends, in this case, getting personally rich, justify any means. And he goes on to say, societies cannot be built, let alone maintained, on a philosophical concept of personal greed above all human elements, while honesty and responsibility are sacrificed. So what does that have to do with gold? Well, at the end here, he says, government destruction of personal liberty is a sign of institutional insecurity. This lowers confidence which is why gold is trading higher. That is why it will continue to trade higher. And I know, we are below the highs of 2011, but you need to, this is a long-term thing. The gold price is a monitor of the success of the rule of law in society. I agree with that, because government was supposed to regulate the value of the coin to make sure that it was good, a gold coin or a silver coin. And, there was capital punishment for counterfeiting money. But nowadays, the central banks are doing it, and there's, they've kind of destroyed the rule of law in terms of value, the measurement of value, which money does. And it goes on to say, that is why its rise is no cause for celebration, the rise of the price of gold. Eventually, gold will be used to help restore confidence in a confidence-shattered financial and political system through its re-entry into the monetary system. It does sound familiar, who can really say that our financial and political systems in the US and the Western world are, really stable and strong? I don't think so. That is its historic role, restoring confidence, gold that is. Until that genuine confidence in our societies is restored, gold will not end its move to ever higher heights. So, not necessarily a good thing, as this book states, Jim Sinclair and Peter Carlin, and I agree with them. And that's why, it's important to keep your physical gold and physical silver. Of course, you can try to, if you're an investor, if you're a speculator, there are other instruments out there that you can use, but I think gold and silver are more an insurance and a store of wealth. Long term, it will keep its purchasing power. I know there are spikes and troughs, but we need to try to avoid, buying gold or, exchanging fiat money for gold only when the market spikes higher. You need to make it something that is part of your savings policy. And this is not just for older, middle-aged people, as I've had criticism from some viewers, that, this is for young people as well, because this is for, your future as well. Everyone needs to understand about what government has really done to our money. Money is not a measure of, a stable measure of wealth anymore, of constant, with something that's constant like gold and silver. They've completely, ruined that trust, in my opinion. A lot of people still don't see it, but it will come out. And when that happens, look out. Am I saying it'll be a horrible world? No, it'll probably be a good world, because confidence will be restored, but it will be painful. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Twitter and on steemit.com. I'll talk to you later. Bye.